As usual, the bid for Sydney Airport is not a bid, but an unsolicited, indicative, conditional, non-binding, something or other, from IFM Investors, which is owned by a bunch of industry super funds, Q Super, and New York-based Global Infrastructure Management, which owns part of Gatwick and Edinburgh airports. It's conditional, among other things, on getting access to the books so they can make sure they're getting it cheap. And while Sydney Airport's share price jumped 34% today, it stayed well short of the indicative, non-binding price, understandably perhaps. And anyway, we're barely back to where the price was before the pandemic. The question for all concerned now, sellers and buyers, is how long it will take for airport traffic to get back to where it was. In fact, will it ever get back? Without Sydney Airport, the All Ordinaries Index would have fallen 0.2% today, but instead it remained steady, with gains by energy stocks offset by falling banks. The US market rose 0.8% on Friday after a bigger than expected lift in employment in June. Most of the action on commodity markets was among the foods, with falls by wheat, corn and cocoa after last week's big rises. And the Australian dollar was steady at just above 75 US cents. Now, a couple of bits of economic data today. Building approvals were down 7% in May, but they're still 50% higher than a year ago, and in fact, higher than almost every year for the past 30. And retail sales up 0.4% in May, and also much stronger than before the pandemic. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.